Hey everyone, welcome once again to the KoreSummit Blockchain Summit webinar series. Wow, I can't believe it's the end of an amazing quarter. March 2024 is coming to an end here, Kiran. We did it. We
We did
survived.
it. We
I should
survived.
say you survived. You survived. So I want to give you credit for that right now. Just
Oh, not only survived, I think we as a company, we thrived.
So welcome everyone. We're great to have everyone back once again. My name is Oscar Jofre, and I am here today with Dr. Kiran Garimella. Today we're going to have another exciting topic, and I believe with all the other items, this is the one that's it's got a lot of great juice to it. So, but before we get started, I do want to say thank you to our two sponsors who have been very supportive of what we're doing, and of course, Nuvei, one of the largest world processors, payment process supporting the private capital markets. And I need to say this: without that kind of support, all of those individuals out there who imagine how people can invest online easily, it's because of companies like Nuvei. So thank you for Nuvei, not only supporting us in the business, but also supporting us in our educational series. And of course, KoreChain, the first blockchain technology that has gone through an SEC qualification process, which we hope many more will do as well. So as we embark in the blockchain space. So today we are going to have a topic, and Cran earlier he tried to take me. I mean, he goes, Oscar, what are we going to talk about today in marketplace? I said marketplace, and he goes, you got to give me more. I said, nah, I'm not going to give you anything. I'm just going to give you what we normally do. So marketplaces is an exciting conversation piece when it comes to blockchain and when it comes to fractionalization and when it comes to real world assets. And that is, so if you've been following all of our webinars, you will now see that, wait a minute, yes, that's right. You guys talked about that. You talked about real world assets. You talked about real estate. You've spoken about blockchain. You put in, and you've even talked about secondary market trading. And all of a sudden, you're bringing this marketplace. It's exciting for me. Do you see it now? Why I didn't tell you enough information?
No, because we'll just make it up as we go. I'm just kidding. I think
No, it's so let me get started for everyone. We're gonna put a definition on this because it is
yeah.
important. Like everything else, there's no sense in going into a conversation without you having some background into what it is that we're going to be discussing here today, that is going to have some relevance into everything we're doing. So marketplaces, what are they? So, in the context of the private capital markets, a marketplace, when you're hearing the terminology, it is an environment that has been created using one singular regulation. And this is the most important aspect of a marketplace, what makes it so exciting. So, in our previous conversations, we talked about Regulation A+. Well, look at that. We're now coming full circle with all the different elements that we've had. Our marketplace, in the context we're going to discuss today, is for the private capital markets using the one regulation, Regulation A+. And we're going to go into that with Kiran here we're going to talk about the structure of a marketplace. We're going to talk about the regulation of the marketplace. And of course, the technology. I mean, the holy wow, the holy, what do they call it? The mega, that moment.
The grail, the holy grail. Yeah.
Yes, it is, because it's the one. I mean, look, you and I, well, I know you've been in conversations with another party that they keep coming back with the same questions and over and over. It's
That's right.
almost like walking them to a marketplace. And people did not know these existed. So, as I said, a marketplace is defined for us in the private capital markets with one singular regulation in place. So I'll cover that aspect first, and then I'll get Kiran to start giving you some of the high level mechanics, what makes a marketplace exciting. So as I indicated, Regulation A+. And why is that? Because Regulation A+, as you followed all our other webinars previously, it is a singular regulation today that gives the power to the company and the investor the minute the investor purchases that security and is being approved and closed by the FINRA broker dealer, the investor can begin to trade with no holds. And that is powerful. That's number one. Number two, you can raise up to $75 million. That's pretty good. And it looks like it's getting increased to 150. And here comes the woozy, the big one. Regulation A plus allows a legal structure that only the United States has. It's called the LLC series model. And I know you're all like, wait a minute, is this going to be like a legal training session? Nope, I'm just going to leave it at that. It's called the LLC series model. So I'm going to give you a high level overview how that works so you have an understanding. A singular LLC, and for the purposes of this discussion, we're going to call it Garimella 1 LLC. Garimella 1 LLC. When you apply to the SEC with the Form 1A that we discussed before, you're going to describe underneath this LLC, Kiran is going to collect cars. Kiran is going to put a whole bunch of different cars inside this one LLC entity. And for each car, it's going to create a series. So the first series one, he's going to call it Spider. So that's his Ferrari that he's going to code for 4 million. And the next one is going to call it the Bugatti. And this one goes for 16 million. Now you adding it together, we're at 20. And then he puts in a Lambo and it's only worth 1.5 million. All of these are the series, the assets, the real world assets that he's putting underneath. And they will total 75 million. It could be one real world asset, or it could be, and by the way, the asset could be film, could be digital, it could be any asset. I just want to make sure I clarify that. And it equals 75 million. And it could be one series, or it could be 100, 10, 1,000. It equals 75 million. And what makes it exciting in each of the series, there is a limited quantity of those tokens, shares, whatever you want to call it. So there is a demand to get them before they're gone. And then once they're sold to the investors can begin to trade in the environment. And that is the legal makeup of the marketplace that we're going to be discussing today. And so I only talked about part one. Kiran, let's fill in the rest of the goodies, because marketplace is a lot. You know that, because typically when we're talking to people, we have to explain it in bits and pieces. I just explained part one, the legal framework. Next.
Well, so it's interesting when you look at marketplaces, right? I mean, let me just step back just for 1 second, because you said, by the way, I love your analogy of Kiran Garimella one marketplace with the cars. Oh, I'd love to have those cars. That's fantastic. For sure. I almost have a antique Ford Thunderbird, right? So it's pretty cool. No, traditionally, if you and I want to emphasize this because you created a very, very nice framework when you started this. You basically said a marketplace is a place where there's a structure, there's a regulation, and there's a technology. Those three things have been the defining factor for what is called a marketplace ever since the very first one took over in 4000 BCE in Mesopotamia, right? In all marketplaces since then, they're pretty interesting. They brought all these merchants together with this common structure. They offered certain regulation, even though they didn't call it regulation. There's some operating rules and mechanisms around it, right? And then the third part is the technology. Now we think technology, but in the ancient world, it wasn't technology like computer technology, but operating mechanisms and other things that actually were there, right? So it's pretty interesting when you have this and you say, hey, how can we take that and bring it into the online world, which now started with eBay and Amazon, right? The first online marketplaces. But now we're moving slowly into something much more definite. It is under a specific regulation, Regulation A. and it is for certain types of assets. And then now we're dealing with securities on top of that, right? And there's one interesting note that I want to share with you all, because this is going to be the backdrop for where blockchain and other such modern technologies can play a role. So, and interestingly enough, marketplaces were the first mechanism where the concept of money was invented, or it motivated the concept of money, right? Because before marketplaces, people were kind of exchanging potatoes for tomatoes and tomatoes for cards and stuff like that, right? But now, what is the impetus for having money? Well, it is the marketplace. You can't have people trading potatoes for tomatoes and tomatoes for sheepskins and sheepskins for cartwheels and so on, right? So the whole concept of money came across, and I think that has an important bearing for our next evolution in our blockchain related marketplaces, the evolution of security tokens, and then under the rubric of a regulated Reg A plus, right? So I want to talk about that piece, but hopefully that kind of made sense, Oscar. And then we can then move into technology. So if you had any comments around that.
No, actually, that was really good. Thank you. And like always, we want to make sure everybody has a good understanding, because we do see the term floating around. And
Yeah.
for this particular session, we are going to kind of not just talk about it. We're going to do some visuals, so a lot of you can not only visualize what all of this entails, because it is a lot. And those who are thinking of operating a marketplace, if you're going to do art, music, film, real estate, cars, anything like that, the model is there, it's working, we know it, and we're going to share that. We're going to share that insight with you today, that other people are taking months and years to figure it out. And we're not going to give you all the goodies, but the legal structure is there. The lawyers are all set up, and now is the marketplace. So you said it, the first marketplace. So here's the modern age marketplace in the 21st century that brings together blockchain, the private capital markets, investing in secondary market trading. And that is the marketplace of today, and what is going to make the private capital market so exciting, because it is the one environment with one sole purpose, with one asset class operated by one sole operator, that keeps bringing inventory of assets to potential investors, and these investors create an account in this environment, and they're doing it because they have a likeness to this product. They're not investing, right? Like when you were looking at art, it's because you like that piece of art, right?
Absolutely.
Right.
And this is and this is a very important distinction, Oscar. I think the traditional view of investing is, I don't care what the instrument is, I don't care what stock it is, I'm in there just to buy low and sell high, right? I mean, just want to make money with it. But with the modern marketplaces, the way we are thinking about the series LLC and blockchain related security token regulation A plus marketplaces, I think we're seeing a change in the culture here, where people are saying, the reason I want to participate in this one is not just to make money, but to make money in a fun way, where I get involved with the community, with a common vision, common goal. It's a hobby, it's a collection. We're all very excited about what we're doing here, right? I mean, I think so. The dynamic market. So, I mean, this is fantastic, because the concept of marketplaces with Reg A is, it's expanding the whole notion of community very beautifully, right? And one of the things I think, Oscar, we need to talk about as we continue forward is the concept of risk and liability in these types of marketplaces. So, but we'll get to that one. So I just wanted to offer some why this is so exciting, and the community aspect of it.
Agreed. Risk is one of them. So as we were touching on, so the marketplace, we now know the regulation A plus.
Yep.
We now know the legal structure. It's an LLC series model. It's the only regulation anywhere in the world that has that. It's an amazing element to it, and where you can put any assortment of assets underneath that equals 75 million, and the investors are buying into each of these individual assets. And we started touching on the second element of a marketplace. It is a community builder. It is not just people coming. Yes, they're coming in to invest and make some. Of course, we want people to enjoy that, but they're coming in because they have an affiliation to that. They we all have hobbies. All of us would love to own a piece of a Picasso, or maybe a Bugatti, or maybe that piece of real estate, or that film, or that music. We're now given the opportunity. Remember, up until now, there were marketplaces. They were just private marketplaces going to a bar or a restaurant, and only 5, 6 people got to participate and benefited. Now we're allowing the world to participate. So the marketplace has a community element to it as well. So regulation, now a community where the community can interact between each other about, obviously they're only talking about the topic that the marketplace is operating.
Yeah.
Number 3, it allows the individual inside the marketplace to invest using Regulation A. And now comes who can invest? Anybody over the age of 18. So now you have a regulation that allows anyone to invest any dollar amount that you set the minimum and the maximum that they can invest in. Boom, there it is. So now you have piece number 3. The next piece is where the investor in the same platform that they made the investment can do the holy grail. They can trade.
Right.
And, companies like North Capital, one of our great partners, Checkshare, Rialto, the secondary market ATSs, they're loving this. Why? Because this is the place, ladies and gentlemen. This is the place where it's happening. Why is it happening here? Because the community keeps everyone here. The information is fluid on that subject about that car. Oh my God, I didn't get enough. I didn't get a token for that one, or I didn't get a share for that Bugatti or that piece of art. I want to get it. So in the same environment, look at the 3 magical items: community, invest, and trade.
You know what's remarkable about what you just said, and some light bulbs just went off, some dots connected for me as well in this one. When we moved from a physical, the ancient marketplace, a physical place, to online, we lost some elements. So if you look at the old, physical marketplace, everyone went there and they traded. So we know that money became a invention to facilitate that, and then it kind of expanded from there. But one of the interesting things about the marketplace, like the ancient physical marketplaces, that was the primary means of communication of what we today call social media. That was it. That's kind of where people exchange gossip and news and information, politics, all that wonderful stuff. Then they educate. There's also education going on all the time. I mean, I think there were some booths where people were saying, here's what pottery is all about, and here's what paintings are about, and things like that, right? So there was education component, and then they wanted to trade. They traded right there. There's no point going somewhere else. But now that we have online marketplaces, that connection completely broke up, right? I mean, how many times do we go to the traditional public stock market, and you buy in one place, you get your education somewhere else if they choose to give you an education at all, and then for trading you have to go to a different platform, which kind of makes it's crazy, right? So what's amazing about this new marketplace concept we're all talking about is that now we're bringing it all back in, but now facilitated with technology to make it much more fluid, right? I mean, we got to love this part.
Oh, 100%. I mean, look, we've been big supporters of this. It takes a lot for people to get digest. A lot of people have these ideas. We're constantly talking it right now. Art is the number one topic. We have our new client coming on board with Regulation A plus, a marketplace. They're going to disrupt this market tremendously. Why? Because everybody wants access. I know to some of you go, why would you want to only own a piece of art? Well, I mean, that's the beauty of people do. And they're also adding an NFT component to it, which is even more fantastic. This is, as you heard on our previous sessions, we're now moving in the direction where we can combine the two. One is a security, and you can add the bonus. And all it is an NFT of that painting, which, look at that. I own a piece of Picasso.
Exactly.
Right? It's an excitement, and we're seeing it, and these marketplaces. So I'm going to share a screen with you right now because I know we haven't done this before, but we're going to do it here because this complexity of a marketplace for people to understand how it works and everything, it's really
Mhm.
important. We talk to, what is a marketplace? It's a community. It's a place where people engage. It's educational, where people can learn. So the user that's coming in, who eventually becomes an investor, it's not necessarily coming in to invest and trade immediately. It's coming in because it wants to know more information. How many of us every single day do that? Now, what's really interesting about a marketplace, in order for it to operate, it needs to be fully compliant. And behind the scenes, and they're in blue here, behind the scenes, what do we have? We have an SEC, sorry, we have a FINRA
Pindra,
registered
bro.
broker dealer in all
Yeah.
50 plus states. We have a FINRA registered broker dealer for an ATS. We have an SEC registered transfer agent. We have an escrow bank. We have all the regulatory items. And of course, we have the core chain underneath it, managing these fractional ownership elements of it, while the marketplace operates fluidly in the modern world. And when you look at that complexity, you go, well, Oscar is just one company, one entity. Well, no, this is the issue that you all need to realize, is that in a LLC series model, every LLC they put in the marketplace. So I said Kiran Garimella 1 LLC, and this one had 7 series. And then Kiran Garimella files another LLC. This one will be called Kiran Garimella 2 LLC, and this one's going to have 25 series. We are talking about the most complex environment of trading and management that we've ever done before, but only regulation A plus allows it, and it comes with all the regulatory components in order for you to do that. So anybody engaging to do this, not only is it what you need to make it look in the front is the fantastic, that's the engagement, and boom,
Yeah.
but you cannot overlook all the blue area that you need to satisfy the securities regulators in order to maintain the compliance of it. But today, there is a legal framework in order for all of you who have envisioned of operating a platform, maybe you didn't even realize it was called a marketplace, to allow you to take a particular asset or item. And I'll give you some ideas. I mean, you and I, it today is no longer in business, but when it first came out a few years back, we
Mhm.
thought, wait a minute, this is pretty interesting. Doing basketball shoes. And
Yeah.
I don't collect shoes. I don't collect basketball shoes. I don't collect people's use wear or anything like that. But I understand there are fans out there,
Of
want
course.
everything Michael Jordan and all the basketball players. So the idea, the concept, phenomenal. The only flaw in the entire model was that the amounts of the shoes, it was a lot of shoes to equal 75 million. So that's number one. And number two, the amount of inventory in order to keep the audience engaged is critical.
Yeah.
So that's why it's working for art, cars,
Yeah.
film, music, and you and I are going to talk about carbon credits as well.
Oh
So
boy.
right, so the structure of a marketplace and what it can do is so critical. And I believe, in my humble opinion, and when it comes to regulations, I am letting everyone, I firmly believe that what will make regulation A plus work, and not only work, but also provide the benefits to investors and everyone operating, is marketplaces, because it provides the three things we talk about each
Yep.
day when people are using the regulation, but they're doing it on a singularity offering where this is an entire marketplace.
No, absolutely. And I don't think it's only people who collect. It's people who are actively engaged in a particular hobby, know the power of the hobby itself. I mean, just to take a simple case and example, I mean, I love paintings, right? Yeah, and except for a few limited edition prints, most of the paintings that I have, the frame is more expensive than the actual painting itself. Yeah, right. So, I mean, I would love to have, in my collection, a piece of some of the old masters, and be able to point out with pride and say, oh, look at that. I mean, that's something. It doesn't have to be old masters. Even there are a lot of new, well-known painters, but they're pretty expensive for individuals like me just to buy the whole painting, and it'd be nice to hang a picture of that, a replica of the painting, and say, hey, you know what? I'm a I'm a part owner. I'm a fractional owner in this painting, right? And that would be a fantastic conversation piece for many people. So, I mean, I agree. I mean, this is in one place. You're getting education, you're getting community, you're getting a support. You're being, enabled. You're reaching out, networking, and looking at something that you can be really proud of. And oh, by the way, at some point, that will increase in value, hopefully, right? And that is almost like the icing on the cake.
It is. It is almost like icing on the cake that it, and we've seen that with horses. And I know people
Oh
are,
yeah.
what? We're now seeing marketplaces for horses and athletes. Sorry, I was just checking some of the clients that we're dealing with. I know you go, what do you mean, Oscar? Doesn't that sound like slavery? No, it is not. I just want to be very clear. These are athletes in golf, basketball,
Yeah.
football, where they're selling. They need support at somewhere down. Look, this has been, I want to make sure everybody understands these marketplace models, why they're existing today is
Hmm.
because of how we started this conversation from the beginning. When David Wheel pushed the envelope to get the Jobs Act put into act and President Obama signed it in April the 5th, 2012, the word democratization isn't just for small companies to invest. It democratized the market. And
Yep.
it democratized the way you need to think about everything you do, the possibilities. So prior to 2012, this concept, could you have done it? The answer is no. 2013, no. 2014, no. 2015, no. 2016, yes. But it took a few more years for all of us to, figure out how to bring it all together and also bring it to the attention of the SEC so they can approve them. And because that it still requires the regulatory approval of operating these environments, which they have now. So there is precedent. So it's not like you're being blind. The first ones pushed the envelope, and now we're here. And we're going to talk about the risk because you did bring that in. Just
Yeah.
because it's wonderful and and it's got all the regulatory items, it does not mean it doesn't have risks. It it that's not going to
Yeah.
happen. It
But
everything.
yeah, but though, so if you look at the entire structure of a marketplace, so there are risks in all marketplaces, but the fact that it's a marketplace minimizes the risk somewhat if it is engineered correctly, right? Because there's now various players in it. There's education going on. There's a social component to all of this one. But the way I think about it, Oscar, is that there is a legal structure. There is a main LLC. LLCs obviously offer limited liability already. That's the reason why they're there, right? But under every LLC, there are series LLC that offer additional liability protection. It's almost nested second gate of security, so to speak, right? You got the overall gate, second gate. But now under that, we now have the Reg A, which now, as you pointed out in the big wonderful diagram, you've got FINRA registered broker dealers, SEC registered transfer agents, SEC qualified offerings, all of that in accordance with the regulation, main regulation A, capital raise itself. So we have another layer of protection even below that. And then, of course, we'd love to talk about how a permission blockchain can add an additional layer of security and safety to this entire mechanism. So I think it's a pretty revolutionary idea. When you look at all of these layers of securities here.
No, I do agree. I think one of the things that I look at, and you should, every private capital markets should have you know these capabilities. But one of the things that I'll share with you when it comes to risk of any company online,
Mhm.
you have somebody else to talk to. You think, I mean, they are building a community, but I
Yeah.
think the marketplace reduces that risk. Why? Because the members themselves are talking about everything in generality. That community that is happening inside, it is so
Yeah.
powerful. We didn't realize it at first what the true value was other than engaging idea. But what is it ends up actually doing? it actually reduces the risk of what people are looking into. And what that means is that because everybody who's there has
Mhm.
an affiliation to what it is. So I'll give you an example, art. I mean, um, in art, we've heard about fake art, we go about this art. So when the platform is saying, yes, we have had this art verified and we've gone through all the verification and all that, and people can say, yes, that company is reputable. Yes, they've used it. This is the one that verified the Picasso. So the community can build around itself. And the marketplace has to be very careful as well, operating not to be engaging in that, letting that free flow, because that's exactly what the regulars want. They want to be able to let that community speak to themselves. Now, could they add the painter to come in there and discuss the painting to bring some insight as to what they've done? Of course they can. So it is important that the marketplace, that's where I see the risk reduction. It doesn't change the risk that it could fail. I need everyone to understand it doesn't change that, but it removes a lot of the risk items that people are often thinking, is this real? I mean, am I, because
Yeah.
we've all heard about how people got scammed and other things. So we're not going to talk about scam, but we're talking about the real value of a marketplace and why they're going to be so explosive in the next, 12 to 24, the next year, 2, 3, 4 years. And we're going to see more of them coming up. And we're going to see some really interesting ones in real estate. I think real estate is going to be the big one.
It's a class.
Um, I think it's probably I think it's one of the best assets because number one, the average investor doesn't actually get access to it. So that's number one. Number two, even when they do, they have so many questions because they don't understand the terminology the real estate industry is using. So again, coming back to that community aspect of it, where the community teaches itself, oh, this is what a yield is, and this is what it means, and this is what it means when you get a 1099, and this is what a K1 is, and this is when you need the K1. This is how you fill out a W8. This is how you fill out a W9.
Exactly.
And
Mhm.
people go, and it sounds crazy, I know, but only a very small percentage of people know how to do that, right, Grant? I mean,
Yeah, absolutely.
right? We were just talking to someone, and the reason I'm talking about real estate because in each marketplace there are going to be different elements that are very important that need to be educated to the audience because that's one of you saw on my screen. One of the very first things that you're bringing in is to educate an audience in a particular asset that you're dealing with, whether it's art, real estate, whatever it is. You need to educate. You are going to provide those materials. You're going to, and then that's going to create the engagement of that audience, while at the same time you're providing them opportunities for them to invest and trade in your environment in one place. And
Yeah.
here is what we do know as well. I mean, the audience doesn't have to be big, right? Everybody goes, oh, in order to be successful, you need what, like 1 million, 2 million? Well, I'm going to give you all an example of one particular marketplace with 50,000 members, which Kiran is one of them, and me. And in this marketplace, the company within less than 18 to 24 months went from a valuation of 10 million to 1.2 billion dollars from one financing round to the next. And why is and the amount of investors inside the community, the amount of community members inside the less than 50,000. So what does that tell you is that, when people go, I need 1 million. No, you don't. You just need this part of individuals for your community that share an affiliation to this. And you don't need volume, you need quality, right? I
Exactly.
want to find it correctly. I don't want to use the word quality. What's the word I'm looking for here? I don't want to, that's the wrong word, but where you're pinpointing exactly who you need rather than bringing people just for the sake of it.
I think quality is not a bad word. I mean, I think it doesn't mean good, high quality people. It doesn't mean in that sense. It just means people who are engaged, right? The right people with the right attitude. I mean, that's instead of just anybody, right? I mean, look, in the public markets today, we have people who invest in companies that have no clue what the company actually does, They just invest because they want to make money. That's not the dynamic that's going to succeed in marketplace. I know there's still going to be some people like that, obviously, but the majority of the people who join marketplaces and they gravitate towards it because they feel a sense of connection to something. So on that note, there's one question I want to ask Oscar, and I think we should probably discuss this. Um, let's say that I am just an individual with a passionate hobby. I'm collecting stamps or I'm collecting knives, right? Different, knives from different parts of the world, etc., etc. What steps would I take to leverage these mechanisms here, the reggae marketplace, and how would I go about doing that?
Well, that's great. I mean, I'm sure everybody's thinking I have all these. I have an affiliation to this art or knives. Or it's funny you pick knives. That better be careful with you. Um,
Exactly.
we talk to a lot of people who have ideas, and we applaud them. There's a number of people that have come to us. Hey, Oscar, I want to run a marketplace for using real estate, and I go, that's fantastic. My first question that I always have is, are you a sponsor? Are you in the space already? No, I'm not, but I see the opportunity, trillions of dollars. Okay, great. Do you have access to inventory? And I use the word inventory because, again, in order to keep that audience engaged, if you don't have more inventory, constant inventory coming in, you do not have a marketplace. And we've already seen one or two platforms fail, not because the idea wasn't sound, is that they didn't have enough inventory for the audience. They kept coming, oh, it's the same, it's the same, it's the
Yeah.
same. I
Hmm.
want something new. And I'm not referring to, oh, one day you're doing knives and the next day you're doing cars. I'm just saying a new knife, a different knife, or
Exactly.
a piece of art.
Exactly.
It's all in the same context. So that's the hardest part. So that's why I say it's easy for some people to gravitate to it immediately.
Hmm.
Art is a perfect, a great one, and we're going to talk about carbon credits. You and I, we asked all the right questions. Do you have access to the art? Do you have
Yeah.
how many? And do you have access to more art? And can you keep producing more art so you can keep displaying more art for the audience? Because the audience will be expecting that. If they don't, they're going to leave, and then
And
you
that,
have unsuccessful platform.
yeah, and that's the key. There's a constant supply happening, and
Supply,
there's
sorry.
enough, exactly, and there's a nucleus of demand always for something like that, right?
There is, and we already seen it firsthand as an example that it works. We've seen how, if when the supply is constant, um, I'll give you an example. The most successful marketplaces that are available today are filing at least one or two reggaes per week.
Yep.
So that tells you every single day they're keeping adding more inventory to their platform. And when I say, and you go, well, that's a lot, I think they're not even scratching the surface of the entire market. Could there be more than one art marketplace? I believe there could be five.
Yep.
Well, how's that possible? Well, Kiran loves Monet, and I like Picasso. What does that mean? Well, there are different forms of art. There are different people that are even,
Oh,
passionate.
yeah. Yeah, not only that, I mean, different countries focus on their cultural art pieces, right? I mean, so there's a lot of native art. People who like the old masters don't maybe like, country art or something that's different, or vice versa. So, yes, there's going to be subspecialties in this ecosystem for sure.
There is. I think that's probably one of the things that I constantly keep reminding everyone, that it's the there it's just one is successful, it just tells you there's so much room. And if one can be $1 billion marketplace, and I'm talking about their valuation, not how much they're processing, that's
Yeah.
another, with 50,000 active users, that tells you something right there about the market and where people are actively investing and trading. And this is the holy grail. And the good thing about it is that the environment is all in your marketplace. All the regulatory items, so we've removed the risk of, oh, am I doing this compliantly? Not to worry. On the primary, we have an FINRA, register broker dealer. On the secondary, We have a FINRA registered secretary ATS.
Mm-hmm.
For the settlement, we have an SEC registered transfer agent. On the primary, we have a bank escrow. Like all of the pieces are there, and it's fluid. For the individual investor, one of the other benefits that I see is that because they came in and they provided that information, the first time when they have to enter their data is they have to put a few more keystrokes in. By the time they go to their second one, that information is already captured inside,
Already there.
right? Just like when you were doing that, you were just clicking. Look at that. I
That's
got
right.
the page that they wanted to know how much and signed the sub, and boom, voila, I have it, and I'm just waiting to be approved so I can then trade it. So it is
Absolutely.
really exciting. So, all right. So we talked about art. We talked about, cars. I mean, look, if any of you have any questions about what kind of assets you can do, I'm telling you, the only lack of anything is imagination. That's one, and the other is inventory. No inventory, not that it doesn't work. I just don't want you to fail. And why? Because building this environment is not exactly, something that just you're going to make a major investment into something
Mm-hmm.
that's going to worth billions of dollars for you, and as well your partners, and of course the investors who are participating in your marketplace.
Right.
But every once in a while, you get a very complex marketplace. So today we're
Mhm.
going to talk about carbon credits because we are in blockchain. And this, I'm going to describe the problem, and I'm going to give Kiran to give the details because this is a very complex. So if all of you have been following carbon credits, it's in the news constantly. But the only time you hear about it are when countries are trading carbon credits, and Fortune 500 companies are trading carbon credits, and Fortune 2000. And after that, it's sort of like we're in the weeds. We don't count. And and the only way you can understand why we don't count is because at that level they it's a high level number and they're trading it. But when it comes granular, it becomes difficult. It's called the last mile. If any of you have ever followed the telecommunications industry, it has a terminology called the last
The
mile.
last mile. Yep.
Last mile. And in carbon credits, Kiran Garimella has come up with a model for what we call the last mile of carbon credits. So we're going to describe here a scenario where, for all of you who have been thinking of carbon credits, how it can work on the chain in a marketplace, that it could change the dynamics so everyday people can participate. So walk us through that, because I mean, there are many different types of carbon credit. Let's talk about that first, because I thought carbon credits was only one thing, but boy, you clearly told me there are many types, and there are many certifications for carbon credits. Correct? That's the complexity to it.
Oh, yeah, yeah, yeah. No, absolutely. So, it's pretty interesting, what people want to do with carbon credits. And until now, it's the whole notion of having carbon credits and, um, you know, just the various types of carbon credits and how do you trade these carbon credits? What are all these different carbon credits, right? So we have many varieties of carbon credits, right? It can be, for example, in renewable energy, right? It can be in renewable energy. It can be in land use and forestry. It can be in energy efficiency, methane capture. So the one we were looking at very closely was the methane capture, right? So there are definitely going to be many varieties. Atmosphere, for example, airplane, different industry based carbon credits, and so on. But the very interesting thing about this is that at the underlying, the base for all these carbon credits is that there is a usage and how it affects sustainable resources, and to what degree does the industry or the company conform to the requirements of sustainability within that particular industry. There are various types of certifying organizations, and they're all focused on different aspects of it. So, for example, we have VCS, which is one. We also have the gold standard, certificate, which is obviously the gold standard for it. Then there's the climate, community, and biodiversity, which is a CCB standard. There's American Carbon Registry. There's a clean development, right? There's a climate action reserve. So all of these are, various ways, right? And so if you look at any particular industry and you look at the carbon credits issued against that, so now the industry or the company behind that is operating under one of these platforms where maybe, like the Reg A, and they have securities against that one. But what is the value of a security? So far, if you look at shares, any financial instrument, there is a valuation behind that, right? It stands for something tangible. What is the real value of the underlying asset? So underlying asset, like in shares, for example, it can be the cash flow, it can be the inventory, the price, earnings per share, EPS, price equity ratios, and all these different ways of valuing securities. Now you take carbon credits on that one and say, well, what is the value of carbon credits against this particular security, right? Now you have to take into account the fact that there are various types of carbon credits, there's various types of certifications. Our ability to connect all of these things and provide what we call the chain of trust for this carbon credits is going to be invaluable, right? And so now you're looking at securities and you're looking at what gives these securities the value they have. There are the fundamentals are always going to be there. But then on top of that, we also have the carbon credit portion of that as that, right? So it's very dynamic market, Oscar. I have to say this is very exciting because people can actually trade they can carve out the carbon credit portion of that one, and they can trade based on that one. It is like creating collateralized security pools, if you will, and using those as instruments to trade. So it's going to become an extremely dynamic market in this whole carbon credit space.
Well, and as we were discussing, I mean, the smart contract that we're working on that hopefully will work for someone on the carbon credits is that you can take all of these certifications and
Yes,
grab the data that is being done right at the farm level. Let's break it down to where is that carbon credit coming from? I mean, there's the
exactly.
certification. Where is that carbon credit? Well, it's that farmer who has the app, and
Yep,
it's down to that level. And this is one of the most exciting that we now know these pieces all exist. Now the key is to bring a marketplace because it is most viable environment for a carbon credit to exist. Because
absolutely.
regulatory allows it. I mean, I think there were 69 different types of carbon credits. There's for
Yep,
plastic, there's for wood, there's
yep.
manure. What there is so many different. I think when we first started talking about it, I thought carbon credits were just one item. I mean,
Exactly.
the
Hmm.
the, the manufacturing, right?
Yeah,
But
exactly. And what you alluded to is a very important factor, Oscar. So I want to just say a couple of words on that one. So if you look at the origination of a carbon credit, so way before a carbon credit becomes a carbon credit, there's a whole sequence of events that lead up to a creation of a carbon credit, and that's what you're alluding to, right? So where was it? Where was the fundamental asset produced? Who certified it? Who weighed and performed a quality check on the mulch or the underlying, whatever is the raw product, right? Who performed that one? Is that person, is that entity that hauled away the waste, or tilled the land, or cut down the trees? Are they qualified? What is their certification? It's the ability of both the investors and market makers and regulators to trace the chain of events and look at that and have confidence and trust that every party there has, in fact, they're valid, they're certified, they're legal, they followed the procedures, and they followed the standard of the underlying carbon credit, whatever is the standard in the VCS or gold standard, doesn't matter, that they performed everything. That gives such a solid amount of trust in the underlying carbon credit, which now can be traded with more informatively traded rather than just speculatively.
it's pretty exciting when here we're talking about something. The marketplace itself is complex.
Mhm.
Now we've added a very complex asset that everybody keeps hearing about. I mean, it's interesting. I was booking a flight because I'm going to be speaking in Indianapolis next week, in a couple of weeks, sorry. And while I was booking my flight, it was asking me if I wanted to offset my carbon credits.
Yeah,
And it was
exactly.
going to pay. And I'm going,
Mhm.
airline, you should pay. But the important thing is that it's happening every day. And you and I were also having another conversation where we saw a company using Regulation A plus to raise money to plant trees where investors will not get a return for the next 10 years. Again, another carbon offset that it was independent of itself. And
Exactly.
we're so we're creating a kind of a derivative of all these other assets that are out there where people are going, I want to do something for the environment. I want to be
Yep.
able to participate where the everyday person is not. This is, I think, why I brought it up today is because we've been talking about it now for quite some time. We created a paper on carbon credits to use in a Reg A marketplace, and I think it's finally ready. I believe there are 69 smart contracts related to each one of the carbon credit, which makes it so unique. So anybody wanting to engage in that particular audience, this is a game changer to allow everyday people to say, okay, I can make a difference. I'm going to put 500,
Absolutely.
right?
I mean, today, look at way the people are investing in the stock markets. There are ESG companies and ESG indices and portfolios today, right? And it is now extending that whole concept now to democratizing the involvement of people in the ESG community. So I agree with you. I mean, this is going to be not only it's going to become an increasingly powerful game changer because more and more people, especially with the millennial generation, they're getting much more involved, much more active. They're more interested in sustainability, in growth and environment, and for them to participate. I mean, look at the example you gave, right? Okay, so I'm going to plug down $10 to offset the carbon credit for my airline. Okay, fine, that's great. But how does it actually reflect in the stock price of the airline, right? What is the connection between that carbon credit offset that the customer did, right? So how does that play into that one? It's our ability to track that level of engagement by the end user into the carbon credit that is going to be so much critical.
That's a very good point. Where's the connection between the two? You're right. I did that, and it did not. How is that reflected when it's playing out in the stock market? In a marketplace, it plays out directly because you're
Exactly.
directly investing into the carbon credit directly. You're seeing the results of the farmer who's making every effort, and I think that's there's another offside to this. This is an exciting element from a blockchain use technology for Regulation A plus, which again, this is the one regulation is the holy grail. We've said it before, and we're going to keep telling you all the amazing benefits of it. Not only from the amount of capital you can raise, but the benefits to the investor and companies. But in this visibility here, in it because the asset is something that the farmer or the rancher or whoever is doing good deed over there, their
Mhm.
work never visible to you and I, like here right now,
Exactly.
right?
Exactly.
And
Hmm.
in a marketplace, that visibility is right there. It's sort of like amazing. I didn't know that's what they did in order to make sure. And you go, you know what? This is we all serve a purpose. We have individuals that are broker dealers, they serve a purpose. There are people who are, everybody serves a purpose. Farmers, ranchers, people who do good, they
Yep.
also serve a purpose. And we shouldn't even be saying they do good. What they're doing is they're serving a purpose, and this is what they would like to do. And
Yep.
in doing so, we can support them the same way they support us in our companies and investing their dollars and growing our business is supporting their initiatives. And I think this is why I brought this up. I really like carbon credits because for the very first time, I actually got to understand where it was coming from. Meaning the farm, the actual farm. You know
Exactly.
what? It became real for me. Does that
Yeah.
make sense?
No, no, absolutely. I mean, for people who don't know this stuff, I mean, they just think carbon credits are just sort of cooked up somehow, right? It's one of those little financial gimmicks that people sort of make up. But there's a history behind it. There's a whole chain of events that actually happen. The only open question is how well as we as retail investors, as retail participants in this entire ecosystem of ESG, to take that example, how can we be sure and with complete accountability and immutable record keeping that all of these carbon credits are actually really true? And when they say they conform to a VCS or a gold standard, how are we sure that they actually do conform to that one? It's that engagement and involvement and interest of people. I think that's what these markets are facilitating. Our series LLC, the Reg A, the whole marketplace. And that's the reason why this is going to be a fantastic game changer.
I do. This is where the connectivity of both, as we said, when we talked about the marketplace, and we're closing it off with carbon credits, is look at the connectivity. The connectivity to art, music, cars, and all that is something you can touch every day. But not all of us get out to a farm. We don't even know the day lives of farmers today. We're thinking that they're driving trucks. Some of you may be very shocked. Most of them are already using robotics. It's fantastic. They're using technology, the very technology all of us are creating. And I think that this is a model. So, for us today, and what we've been doing and throughout the series, it's been trying to walk you through use cases all the way through and understanding the underlying layer of blockchain technology, how it can be used. And you notice in this conversation piece, we spend almost an hour. And when we talked about blockchain and coding and all that, you notice that it only needs like 5 or 6 minutes, or not even that, compared to what's really important. We're human beings. We're real people. We need to understand the problem, the opportunity, and we need to make sure that it's fully compliant, because our whole educational series is about using blockchain technology, making it compliant using the Jobs Act regulations, and using all the regular participants like FINRA broker-dealers, FINRA secondary ATS, SEC transfer agent, using all of those components, and to flourish an industry to continue to grow. And today we provided you an overview of an exciting platform that we have been busy deploying for clients who have a vision beyond just a place where people invest. And again, I'm going to applaud the SEC and people like Sarah Hanks and Sam Gusick, and CrowdCheck Law and KBA Law with Marty Tate, broker dealers like Rialto, North Capital, and Texture, and Andes Capital and Mundao, who have been at the front end of all this, supporting those initiatives. And what does that mean? I think it's really important. Look, we're talking about it, and I said we need regular participants, which means we need parties who understand this. So when you go to them, they don't get, what are you talking about? It's never going to work. Well, we're letting you know it does. Do we have the lawyers, everybody else that does it? So, I want to say thank you to all of them, because in the early days, as you remember, when we first brought this out, it was scary. One of the first, I got to share this with everyone, because I have to be honest with you. When I first did the first marketplace, that would be 4 years ago. Yeah, 4 or 5 years ago. It was for belts and shoes. And I have to tell you, I was sort of like, I'm going, oh my goodness, I don't judge, because one of the things that I promised myself, and I teach everyone, that what we do here is we have an open mind, because just because we don't understand it doesn't mean that that opportunity doesn't exist. But I was just struggling with it, because yes, I have belts, and yes, I have shoes. But what I didn't understand is that there are people who like to collect Prada shoes and Prada belts and Louis Vuitton, and it was first, when we went through it, I go, I don't know, but it became successful. And interesting enough, Otis is one of the most successful marketplaces out there doing just that. They've expanded the collectible items, beyond that, but it's watches and all that. So it just goes to show you look, we're a planet of what, 4.7 billion people over the age of 18. if we all like doing the same thing, it would not be a fun planet to live in.
Of course, right? Yes.
Right?
Thank heavens for diversity.
Exactly. I was walking down. I was talking to my wife yesterday, or the day before yesterday. I was telling her when you and I were in New York, we're walking down the
Yeah.
street, and I said, "Look, there was a bookstore," and Kiran said, "Oh, I can spend the whole day there." And I'm going, "Really? What are you going to do?" And he goes, "I'm just going to keep reading." Okay, I'm just going to go to my iPhone and watch.
That's right. Yeah.
So this is perfect example. Even people that are like-minded with each other share a common. They have other common interests, other
Right.
interests that are outside, and for that reason, that's why marketplaces are going to flourish. So I hope that everyone today enjoyed. Look, we just give you that kind of high-level overview. If you have more questions, you can reach out to us. This is the most exciting time in the marketplace. As I said, regulation A plus is in the verge of being increased to $150 million. Marketplaces are going to explode. I kid you not. They are going to explode. This is where the investors will be more spending more time in doing their investings when it comes to regulation A plus. So till next time, we will be seeing you in a week's time again. Our blockchain summits will continue into the month of April and May. We have been getting a lot of great feedback on some new topics that we're going to include in order to keep you alert. And obviously, we love your any insights or questions you have. We're always here to answer them for you. We hope you enjoyed today's session on Marketplace. And in very time soon, you're going to be seeing a lot of these out there. And we hope that you enjoy and you understand how they'll work. Till next time, Dr. Kiran Garimella, it was great having a conversation with you again today. Till next
Likewise.
time, everyone, enjoy your day. Have a fantastic day. Bye-bye.